Hello student, welcome back to Indian Business School. So let's see the example in Excel sheet. As you can see, we have purchased this kind of asset. So the purchase price is $10, okay. Quantity 10, so total inventory value is 100, okay. So this is how we have updated all the purchase price. In case you sold a particular inventory using FIFO price, okay. So the price was 10 and we sold 5 quantity, so the answer is 15. Now we are selling 15, okay. So 15 we can split this remaining balance. This is our total quantity minus our sold quantity. So these are our remaining quantity, okay. Remaining quantity for first purchase, then their price. What is the price? This is the price, okay. And then we have what else? Since the order is for 15, now we'll go for next purchase. So next purchase is again $10, so we are completed with the quantity, okay. If in case it is 16, let's take example of 16. So there is one more we want to sell, so one more quantity we will consider. And what would be the price? So for first one the price was 10, for second one the price is 10.5. so this entire inventory has been sold. So now we will switch to another price, okay, this one. So every time you can see that price is all the time price is automatically updating. So this is the same method for perpetual. So whether you use periodic or perpetual, this is always changing the price. You are getting my point. Periodic is normally they are saying in particular period, monthly or yearly, you need to change the price, okay. But the logic with regard to FIFO is always apply the oldest price. So oldest price if you apply, so it this whether you are using period method or you are changing all the time, ultimately it is periodic, okay. So FIFO is and indirectly always perpetual inventory system, okay. This is how you will calculate for this. You will get your price. I am assuming that it is clear whether you use period or perpetual, but all the time you are charging old price, okay. So always you are going from below. So the latest price was 10, so you have charged. So till you will not sell this quantity, you will not be able to charge this price, okay. When we sold this 2 quantity, then 8 quantity was remaining, then somebody ordered you for 7 quantity, so you cannot apply this price, okay, because you have to apply the oldest price. So it is automatically becoming the perpetual method, okay, whether you use period or perpetual. So it is always perpetual, okay, for FIFO. So in case of LIFO, how it is working, we will learn this. Now we are going to learn about the LIFO method, how we will be calculating. FIFO method we have already learned. So FIFO based on periodic method, how would be the calculation? So what he will do, he will calculate total, how many quantity we have, 33, okay. How many quantity we have purchased, that is 40. So how many is remaining, 7, okay. So what he will do, he will say your ending balance, what would be our ending balance. He will consider the latest price, okay. So this is our remaining ending inventory into multiply by latest price. So latest price in the sense the oldest price was 10, rest all he will consider. This 3 is as per LIFO, we know that whatever the latest coming will sold first, so this all he will consider sold first, okay. 30, and then 3 from him it has been sold, so remaining 7 is coming here. So that then they will consider this is our ending inventory balance and your cost of goods would be this much, okay. If you calculate the same thing using perpetual method, it is quite similar, but it is little bit different. So why this difference is coming, that you will learn here, okay. This is 16, this is 33, this is also 33. So what he is doing, initial for periodic method, first he will consider which day this 5 inventory has been sold. So if it has been sold on 3rd of Jan, so he will consider the date of 3rd Jan, okay. Then he will multiply. Before that, whatever we have purchased, this 12, he will first consider this price, and then still you have extra inventory to be has been sold. So then he will jump to the another price, and then he will take this price, okay. So this is why if you can see 10 into 10.5, okay, 2nd Jan plus how much remaining inventory is 2 into old price 20. So this is why it is coming 120, okay. And then if you you sold 16 quantity, okay, on 4th June. So here he will be considering first this price, okay, 16 into 10 into latest price 11.5 plus what else. Here we have already sold 5 quantities, so from here we can take only 5 into 11 plus what else will jump to here. Here we have already sold, okay, like this. So he will jump back to the latest price 1 into 10, okay. So this will be the correct price, okay, 180. So this is how it is calculating. So this is, he is calculating first based on this period how many quantity we have. From this period he will remove from that, then he will jump to the another price, okay, another quantity and then their price, okay. And then if you have purchase here, so he will consider first, okay. So for perpetual there is remaining inventory here 7 quantity, okay. So 7 into 10, $70, okay, coming. And for periodic method it is simply considering all quantity and dividing your total quantity being sold based on total period, and then remaining he will charge the oldest price, okay. So that the latest price will be charged to cost of goods, last in first out. So latest price will be charged to your cost of goods, but he is doing every single line item wise he is considering, though you are getting same result, but he is considering based on line item wise, okay. If this line related all the quantities sold, then only he will jump to the another price. If remaining is already remain here, then he will consider the second latest price, okay. So for more clarification, for example, we sold only 2 quantity here, okay. Then what would be the result? Let's see how many quantity we sold. 19, okay. So 19, how many is remaining? 40 minus 19, so 21 quantity is remaining. So ending balance, how he will consider all the latest price he will consider into cost of goods, and the latest oldest price he will consider in the ending inventory. So first 10 quantity into the oldest price, then second 10 quantity into the second oldest price, okay, then plus 1 into this price. So this is the ending inventory, this is cost of goods, okay. Now if we jump here, try to understand this. Let me format it. First is 12, then 5, then 2. Okay. And this one is 2. So for 2, what price we have used? This one, okay, into 2. For the 5th, 3rd March, we will apply first the 3rd March rate, which is 11. Okay, it is coming 15. Perfect. Then second, we will apply for this rate. Then remaining quantity we will apply another rate. Okay, so that is also coming correct. So let's see how much is this total value. 203. Perfect. So total price was 430 minus 203. You can see the difference. Okay. So this is the difference is coming between these two methods. This is based on periodic. This one based on total period cost. So he is considering all the total quantity and then reducing 19. He is reducing from these two cost. Okay. But in perpetual, we are charging the cost based on this date, which date inventory has been sold, first latest price from this. And then for 12 quantity, we have used this price. But here we have used for entire 19, we have used these two costs. Okay. Then remaining we consider as an ending balance. Okay. I hope it is clear to you. So I think I'm done for the day. See you into the next session.